We've also seen the yen, not an outstanding performer, but certainly the best out of G10, and the market positioning would suggest that expectations are for further outperformance to come. What is it telling us when we are still seeing haven demand despite the exuberance across risk assets?
Well, I think it's telling you that there is a lack of alternatives. I mean, we still find some solace in the US dollar. We find some belief that the US dollar is probably going to gravitate slowly but surely higher. That's my view. But if you look elsewhere, the attractiveness of the pound is very, very low. In fact, we want to be short the pound at the moment. So I certainly do. Euro, there's very, very little that supports the euro at the moment. It's got some funding qualities in a time of higher vol. The Swiss National Bank are obviously trying to weaken their currency. You've seen that in the sight deposits. So you look around G10, you look around major currencies, there's not a lot of attractive places to be. And so, in all times, when markets are trading higher and you've got high, volatility, which is being somewhat suppressed, you would expect the yen to be underperforming. But obviously that's not the case at the moment. And, I think the negative carry that you get in Japan is at the lowest it's been for a long time. So that's a big consideration for Japanese funds at the moment who don't mind being long in that environment.
When it comes to, this kind of nascent round two of the trade war, which is not just trading barbs between Washington and Beijing, but also Canberra and Beijing now, how much of that is further to go when it comes to being reflected in the Aussie?
Well, it's not just the Aussie. I mean, I think the Aussie picks and chooses what it wants to look at, really. Some people have noticed the sizable move that we've seen in iron ore. I don't really see that being a major driver. If you look at what's really driving, it's been its lock-on with S&P futures, and also to an extent what's happening in dollar CNH. So if dollar CNH is going to go higher, then I think that's going to start weighing more on Aussie dollar, for example. But I think FX traders they're fairly sanguine on what's happening with trade wars. Obviously, the rhetoric has beefed up. But I think we're not really concerned at the moment until we see a strong retaliation. At the moment, I think the FX market sees this more of a war of words, and something that's probably likely to increase as we go into the November elections. But we're not too concerned. You've seen that reflected in volatilities. I mean, whether you're looking at implied vols, short or longer term, over the election, they're not particularly high. So I think people are pretty happy or pretty comfortable with the idea that rhetoric's going to beef up. And somewhat maybe misplaced is the idea that it's not going to negatively affect asset prices too greatly.